joined again today by Brian Larkin, CEO of United Oil and Gas. Thanks for joining me again, Brian.
Thanks, Darren.
So, quite a bit's happened since we last spoke, Brian. Let's start with the fundraise, the obvious question first. Why another raise and why now?
Well, fairly that would be the first question, and it's fair. Firstly and importantly, this raise wasn't about needing cash to stay afloat. This was more about timing and opportunity. A specialist coring vessel operated by TDI Brooks became available for later this quarter, and in fact is passing by Jamaican waters on its way to Trinidad.
Hmm.
That gave us a short window to run this survey without paying full mobilization and demobilization costs, which is a considerable saving, perhaps even as much as $1 million. Now, if we'd have waited, we would have lost that slot, probably pushed the program into 2026 at a far higher cost. So we acted quickly. We did a small raise now to have a big cost saving later. But
Hmm.
also, there was a value opportunity on the back of the recent risking report that we announced and that we've published on our website. Now, that demonstrates that this work goes well, and we believe that it will, then the chance of exploration success moves from a 1 in 5 to a 1 in 3. Now, that changes the project value for our shareholders massively, and we expect that value to be translated into our share price as we execute this work program.
Hmm. Okay, investors might say, the price I think was 0.15 pence, is quite low. It's lower than the last raise. Why did you accept that level?
Look, I totally get it. I wasn't happy with the price either. Price on placings is always a very sensitive matter. What happened was a key backer initially indicated support around market levels, but then they just couldn't deliver in time. So we were left with a choice: either delay the placing and lose the vessel, or move fast and secure the vessel and move forward with the work program. And we chose to do the latter. We chose to move forward with the work program and complete the equity raise. Yes, there's dilution. I accept that, but a funds work that can add several times that value back. And if it delivers, and we believe it will certainly do that. When we're making a decision around an equity raise, we have to weigh up the price, the dilution, the cost of the raise, because there is cost associated with a raise. There's
Hmm.
legal fees, there's brokers' fees, etc. We have to weigh all of that up versus the potential value on the table. Now, as you and I both know, price is what you pay, value is what you get. The value is supported by the Tennyson research note that was published this week, and that re-rates the project value and also outlines a target share price of almost 1,000% higher of where we are today in a success case. Now, we can't capture that value for our shareholders unless we go and do this work.
Hmm. Yeah, fair enough. Would it have been possible to have got a partner, a potential farming partner to do the funding rather than have to do the raise, for example, now?
We could have done that. We would have had to wait, but we would have lost control of timing and possibly terms for the vessel. By doing this ourselves, we're going to control the pace, the cost, and the date. There's also been a massive cost saving in the mob and demob costs, which I've mentioned, which we think the saving could be in excess of $1 million. And also bear in mind, the cost of this work program or this project will be incorporated into our own back costs, which on completion of this project will be in excess of $8 million. That's money United has invested ourselves into Jamaica over the last number of years. And also, the value of this work will strengthen the farmer effort, and it'll also strengthen our hand in all commercial negotiations, particularly given if a success case where we're demonstrating actual, real, tangible project re-rating value.
Hmm. I'm guessing also doing the work yourself from your own funds, probably, if you've done that work yourself, you're not, if you like, forced into an early partnership, whereby the terms of that partnership might not be as favourable because you've taken it on too early. Whereas if you can get the piston coring done and drive some value out beforehand, you might have, more successful discussions in the data room post that.
Well, exactly. And, we had a choice. Do you leave that value on the table for a
Hmm.
potential farm partner to get, or do we try and deliver that for our shareholders first? So we decided that we try and get that for our shareholders first. And the benefits of this work is quite substantial. This is targeted science. It's about proving thermogenic hydrocarbons in the basin. It's about demonstrating what we've already discovered on the onshore, that there's a verified working hydrocarbon system. It's about demonstrating that onshore geology has continuity into the offshore. A successful drop core survey will prove ultimately the presence of an active petroleum system in the offshore. This will reduce risk, therefore increase value. And I keep going back to the independent study that we commissioned by Lapidus, which is on our website. And that demonstrates that if the piston coring work is successful, we lift the Calibri chance of success, exploration success, from 19% to 32%, Oriel, which is our other target, from 13 to 21%. And we're seeing that similar uplift delivered across the license, and that translates directly into value. I refer back again to the Tennyson research note
Mm.
that was also released this week, and that shows a 42% uplift in risk NAV, which supports a 1.5p buy target. Now, we could sit in our hands and work towards a farm out as a catalyst, or we can try and generate a catalyst for ourselves between now and then. And we believe that can do it. So, yes, short term dilution, but clear route to de risking and re rating the asset. And also, the farm out is ongoing. So, this work will support that technically and commercially. And there's going to be a hell of a lot of news flow on the back of this, which will also act as a catalyst while we continue to work the farm out campaign.
Yeah, yeah. You mentioned the broker note there, which was obviously out this week with a 1.5 pence price target, which is significantly higher than today's share price valuation. And obviously, there, you have a risk nav on success of the coring work of 2.3 pence, so that's significantly higher. And I guess why, going into discussions, having done that work already. Is a more sort of favourable situation, I guess. Okay, the piston coring work itself then, how confident are you that this will deliver a positive outcome?
Look, we're very confident. This is a proven method used around the world to confirm hydrocarbon presence. Remember, we've got oil seeps already identified in the offshore. We've got oil slick anomalies that we've captured up via satellite imagery. The risking report has also verified a working hydrocarbon system on the onshore. And this is now about joining the dots to the offshore. It's quick, it's low risk work, it's relatively low cost work, and I refer back to the significant saving on mob and demob costs. It's a few weeks of offshore operations, and we expect results before the end of the year, maybe in early Q1 next year. So shareholders won't have to wait that long for an outcome.
Okay. And the farm out discussions themselves, then obviously this is something that's been ongoing for quite a while. Did you see the coring work as a prerequisite to a successful outcome in those discussions? So, for example, our potential partners saying to you, this has to be done, or are there some saying it would be good to be done, and others not overly concerned by it? How does that? How does the land lie there?
That's a really good question. No, this doesn't stop a farmer from happening by any stretch of the imagination, whether this work happens or not. This work will have to happen at some stage because it's part of our work
Hmm.
commitment to the Jamaica ministry. So this work has to happen. It's whether we do it and obtain that value for ourselves and our shareholders, or we wrap it into our farm out discussions. Now, our original plan at the beginning of the year was we just incorporate this into our farm out discussions. My team have done an incredible amount of work over the last 12 months on the risking of our prospects and needs. We then brought in an independent consultant to review that work and evaluate it. And the results of that were incredible. And it basically said if we do this work, the risking profile changes. Well, that's in our shareholders' favor. Now, when we weigh up the amount of money we've raised to do this work and the dilution versus the potential upside, which is captured very clearly in the research note that Tennyson published, it began to look like a bit of a no-brainer. We need to go and do this to get that value now for our shareholders. On the farm out itself, discussions are ongoing with an active number of credible parties who are under NDA.
Mm.
And like always, I can't say too much about that because of the NDA, but this work will add massive value. And we already know they're watching and they're paying attention to what we're doing because we've already had some inbounds from them since we announced the fundraise and the signing of the MOU for the vessel this morning.
Right. Okay, so now you're fully funded then. What can we expect in terms of roadmap? You've announced the MOU for the vessel. You're going to turn that into a firm contract, hopefully. So what's the time frame? Are we talking well, I think today's RNS indicates towards the end of the year of completing that program.
Yeah, well, just to re-emphasize just on the funding, not only is the work program funded now on the back of this equity raise, but the
Mm.
company is funded not just throughout the rest of this year, but throughout 2026. And that's an important point. We are funded up and all the way throughout 2026. In terms of the pathway forward from here, well, it's very short and clear. It's survey results, farm out and drilling. It's four steps. Step one, execute the piston coring this quarter. Step two is get results out by the end of the year or early Q1.
Yeah.
Step three is to use that data to finalize farm out on better terms for ourselves. And step four is move toward drilling with funding support and higher confidence. And that's how we turn this small raise into a major value trigger for our shareholders.
Mm.
Now, in saying all of that, a farm out could happen at any minute. And in the meantime, we're taking ownership of the work program to deliver value for our shareholders now. We're in the driving seat now, and we're finally back doing value accretive work that we're really good at.
Mm. So it is possible, for example, someone in the data room could say, obviously going through their due diligence processes, someone could just basically come to you and say, look, we're in. And, you haven't even done the piston coring yet, but we're in. We want in. We can see that the upside success case. I mean, these guys are oil and gas majors and companies. They know oil and gas well enough anyway. So I guess what you're saying is there is a possibility that could happen.
Absolutely, it could happen. As I've said, we've had inbounds today
Yeah.
and yesterday evening on the back of the announcements. Look, there's a value opportunity here, a
Mm.
massive one. What should we do? Should we sit on our hands or should we go and grasp it? We made a very clear decision as a team and as a board and as an executive team that we would be absolutely crazy not to hoover this value up for ourselves and our shareholders now. This is about protecting shareholders' value today, not tomorrow, today, so that
Mm.
we can negotiate a better deal, a more competitive deal tomorrow. And also, Darren, we have to back ourselves here. We believe in this project. So why wouldn't we go and do this work? We believe in it.
Mm.
We have to back it. We have to back ourselves. We have to get that value, capture that value. And, if a farmer happens along the way, well, that's good. That's fantastic. We're open to that discussion. But in the meantime, we need to drive this license forward.
Okay, understood. Final word to shareholders then ahead of the GM, Brian.
But look, I understand this frustration on pricing. I totally get it. I feel it too. I am a shareholder myself, so it's as painful for me as it is for everybody else. But this isn't an equity raise to keep the lights on like the last few raises. This is actually about putting money to work again.
Hmm.
It's about getting work done. We've got the permits, we've got a plan, a very clear four-step plan over the next 2 to 3 months. We've got the vessel, we've got the funding. Now it's about action and getting the job done. And I'd rather take a short-term hit to get this work done now than sit in my hands and talk about what could have been in terms of value capture. And this program gets us moving, and that's how we'll build value again for shareholders.
Okay. Right. Well, thanks again for joining us, Brian. We look forward to chatting to you again in the near future when we're getting closer to the big event.
My pleasure, Darren.